Hello, Warriors. Patrick, Laura, how are you? And Sinatra, Richard, everyone doing okay? Hope you had a nice weekend.
Morning, Dale.
Ryan, how are you?
Good morning, good early morning, Dale. Happy birthday, Blake.
Yeah, so before we get to the markets, I want to address what's happening in Arizona today.
Are you singing? Are you singing?
Happy birthday to you. Happy birthday to you. Happy birthday, dear Blake. Happy birthday to you and many more. You're still young. Don't worry about the number.
Thank you. Good morning, everybody. And
I
thank
know
you
you're
very
worried
much,
about
Dale.
the number. Don't worry. You're
yeah,
in your
it's a
prime, buddy.
Half
I wish
century.
I
No
was
big deal.
50. Anyway.
It's nowhere near resistance yet. Don't worry.
Yeah, you're still you still have support underneath you.
All
Like
right,
the-
great.
Like the euro doesn't. So anyway, guys,
Thank you.
you're welcome, Blake. I hope it's your best year in every way. I know everyone, the whole community and people that work with you feel the same way.
Thank you very much.
All right, so business, guys, risk off, right? Isn't that what this is all about in the currency markets today? What do you think, Ryan? So
Yeah.
we're challenging, looks like we're going to make new lows in the euro, doesn't it?
Yeah, I've got that feeling. I did try little beer pips long this morning at 00. I've just folded that at 98 after taking some at 14. I don't know.
Yeah.
We had the hold this morning, but the bounce was very, very weak. So I'm getting that bearish feeling. I think if it starts to hold below 00 here, we're on our way down.
Yeah. And cable not as weak, but still looks kind of
Shitty.
sick. Yeah.
There's no polite way of saying what cable looked like. It looked crap. It's been looking crap for months and it still looks crap.
Yeah. You guys take a stab at the yen up here. Did you? We got to 78.6. I mean, it's still being confirmed. I don't know if I'd be long up here, but it did. Hit
quite a sharp rejection up there. That was a
Yeah.
former level. Those are the sort of highs we got to in the first run higher.
Okay.
If I recall correctly, 37.43s, that sort of area.
Okay, yeah. And 78.6 if you're a FIB person. Any feeling about doing anything in here this week came in?
Yeah, there's a FIB there. There's also a few trend lines converging there, and it really tagged the level. So that's important. And I don't have much in yen. I was long cross yen towards the end of last week, which did all right, and then I took them off. I don't know. It's a bit. I've put a gun to my head. I'd still be long the yen. This now starts to unless Fed flips around. There's 180, but this thing starts to feel. In my book, that we are going to tackle 140 soon. It's just too big on drops. I don't really see too much reason why it would stop right here and now,
Unless yields flipped. Yields flipped.
Yields is one thing, unless yields completely flip and the global economy goes down under. And some form of risk correlations come back in the yen, but otherwise, I fail to see in current context what is going to put the yen much stronger.
Wouldn't you have thought that with the S&P's down, what they down now, 46, that Aussie would have been lower today?
Well, yeah, that's a bit of the odd one out, because it's not your usual risk off scenario, right?
Yeah.
It is not, because otherwise the commodity currencies would be weaker even through crosses, and the opposite is true. Commodity currencies, like it's like
What do you think that means? What's the market message in that?
Euro bashing. That's the only
Okay.
thing it means, in my opinion. Euro Aussie,
Okay.
Euro Canada, Euro Kiwi, you name it. Euro makes, they're all lower.
Euro 2.
And Euro 2 and 3.
Euro 2.
It's Euro 3, Euro 4. No, it's the euro is just weak across the board.
And Canada just missed the 61.8 level up here we talked about last week.
Yeah.
30, 34, got to what, 19. Ryan, what are you thinking here? I mean, commodity currencies are definitely, you know, if you want to fade the dollar, those are the ones, right?
Yeah, exactly. But yeah, it's looking like it wants to go higher, but it just keeps running out of steam, doesn't it? Just when you think it's going and breaking 130, you know, it gets slapped back. It's all very messy at the moment. I think half the market has got one eye on Friday and Jackson Hole. We've already had a Reuters poll out this morning saying I think it was 76 out of 94 analysts expect a 50 pip hike for September, where all we've heard from Fed members so far is that they're going to go 75. So we're going to have this battle this week. I think it's going to be really important this week. We're going to have this battle between the market doves and what the Fed might actually do or what Powell might actually say.
I think that's the whole game, isn't it? And I think they're front running hawkishness for Friday. And I think Friday we also have an inflation report before Powell speaks at Jackson's Hole, as you would say. Andrew Jackson, president, I don't know, the 10th president of the United States. So, you know, I just want to say something, just a little coaching for trading. You know, last week I was zoned in and I knew what was going on, and I thought that, you know, they would turn into fades. And, you know, I come in this morning and I don't have the same level of conviction. In fact, I have very little conviction. I have biases, but as far as pulling the trigger and risking money, I don't. And, you know, that's hard to adjust to as a trader because you're in the rhythm, and if you had a good week, you just want to keep going. But, you know, recognize it when you feel that way and tell yourself it's okay, that, you know, eventually there'll be something compelling enough that you know, you'd rather get stopped out than miss it. So just something I go through. I would press normally in my younger days and keep going and try and fit in my narrative to what's happening in the market today. You know, if I'd been up last night, I would have taken a stab at the end, but I come in, I'm not going to do it now, and I'm not going to sell Canada now either. And that may have been it, but anyway,
you had it which way last week, Dale. Everything you called it during last week came off. Euro down to the fib you were talking about, DXY up, yields, you know, everything you looked at, you had it the right way. You know,
and that's like another thing. Yeah, another thing. Just because you're right about one side of the market doesn't mean it's an automatic reverse when you get there. So I need to see more evidence, and I'm kind of thinking that whatever happens before Friday, that if you want to, you know, fade dollar strength, even if it's from lower levels, that the Fed will probably give you an opportunity to do it. So metals under pressure. I'm wondering, Stel, are you back from vacation?
Hey, so I talked about metals on the Flow Show. I had, if you guys remember, I was long from 1880. I took a quarter off at 2040, which was really nice. I wish I'd taken more off there.
Yeah,
I'd raised my stop to 1895. It got hit earlier, actually, as we were speaking on the Flow Show, and I'm out. So I made nice on a quarter of the trade, and the rest was kind of a non-event. So still, you know, still a positive trade, but it's not looking very good at the moment. aching to get back in, but I'm going to take my time. I'm going to see some more price action. I'm going to look at what Jackson's Hole says. What Powell says at Jackson Hole, and we see. But at the moment, the dollar is king, and it's driving, driving metals lower, it's driving risk lower, and talking about what's priced into the market. Was it Ryan who said that 18 out of 25 analysts, whatever, are predicting a 50 rather than a 75? Fed fund futures are at 62 or 63 base points. So it's basically in between 50 and 75 priced in. Which I think is probably fair. But we wait to see what Powell says. The bottom line is, as I said on the Flow Show, inflation's high. Yes, we had one print which was lower than the previous one, but one print does not make a trend. And also the equity markets are not crashing; they're coming down in a relatively orderly way. So as long as that's the case, I don't think Powell is going to be in a hurry to get off the hiking horse. We see what he says, but I think it's 50-50 whether they do 50 or 75. I'm torn. If you put a gun to my head, based on what they've said previously and the way they changed from a steady course to a meeting by meeting basis, I would think that they really want to start doing less than 75. They want to.
There are no guns in Greece. Why do you keep saying that? You have to come to America to, at least be able to think it could happen.
So kebab skewer to my head, I will.
All right.
Yeah.
So
anyway.
there is at 1870, it's kind of, maybe a hope level, but it's 78.6 and you have that speed line coming in here. I've had it drawn for a long time. Didn't think it would get here, but here we are. Not sure if it's going to hold or not, but worth pointing out. And S&P's nice gap, got back underneath the throwover. I think 4,000's doable. How about you guys?
Yeah, definitely doable. Depends on Powell again.
Yeah.
It seems to be playing nicely at the big figures. I've noticed.
Yeah.
We had that 43 handle, had the little break, but then it held thereafter. Got to 42, saw a bit of support, then it broke. Likely we're going to see 42s holding resistance again. And then you look at 41s. It's that way inclined at the moment.
I think it's a little too. The only reason I don't think, one of the reasons that I don't think this is the end of the bear market rally, if it is one, it was too bad. I said, I thought we'd go to 200, but not break through. But can you imagine what would happen to the rest of the bears, and most of them are out, and people that haven't committed to the market if we close over the most popular moving average back over it after a pullback? I think you'll see people starting to flip and get bullish if that happens. And maybe after that, better short up here at 44, 45. What do you think?
Yeah, that sounds good.
You like abracadabra, make it happen.
I'm following you after last week's performance.
I'm just thinking it's kind of pat, isn't it? That all you have to do is wait for the test of the 200 and that's it. And now we're on our way to, new lows. Line in the sand has to be 3,800, back under 3,800. We are going to retest and take out the lows, I think.
Yeah. Trading 101, isn't it?
Yeah. What else you guys want to talk about? I mean, any news, geo-wise, what could add to the risk on is, I think it's Ukraine's Independence Day coming up. And
that's 24th.
I think Putin's pretty pissed about them striking bases in Crimea, and then that assassination that took place in car bomb.
Yeah, and we got Gazprom taking Nord Stream off for 3 days at the end of August, an unscheduled maintenance period, although it's contractually they're allowed to do it, but it wasn't scheduled maintenance period like the last one we got. So you know, everyone's going to start drawing conclusions on that. What's happening there?
Yeah,
And,
I think
it just keeps bubbling, doesn't it?
Yeah, yeah. I think Victor Sperando, wasn't happy with having different views. So I think we could talk about this without, I think it's important on the world stage. And what bothers me about it is not my opinion of Putin, but I did catch an interview with Henry Kissinger. I don't know if what station it was on, but he met Putin several times. And he said something that bothered me, and that he has a doctrine of de-escalating through escalation. So, you raise, the risk on the table, and then people are,
it brings a de-escalation.
That they may de-escalate because, it shocked everybody. So, that's a concern. I think that's about all I have to say, unless you guys want to hear me do a song. Like, in fact, global warming took one of my songs off my.
That was a good one you posted up last night. The
oh yeah,
very nice.
Yeah, that was cool the way they did that. But I used to cover Kentucky Rain by Elvis, and after the floods, I can't do the song anymore. At least for a few years. So, Blake, welcome, birthday boy.
Hey, thank you very much. I actually there are a few things that I'd really like to discuss, just because I know in August. It's like we're that last week of August, and I know it's volumes are down, participation is light. People are enjoying their last weeks of the holiday. But I do want to point out that we actually, almost completed the bear flag pattern in the euro dollar. We are trading below parity right now. This is kind of do or die. And then, it's going to be really key. And I know you guys kind of brushed upon it already. We have, with Jackson Hole this weekend, I think this weekend, or, Jackson Hole speech by Fed Chair Powell is going to be at 10 a.m. Eastern, so it's early. And then just before that, as you pointed out, Dale, we do have PCE data, so we have some inflation data coming out. But I think everybody's coming into this, into this event, believing that there's going to be it's going to be jockeying, right, between is he going to be hawkish or not. But I guess the question is there any reason for him not to be? And I think that's why the markets are queuing off of that right now. And we're seeing, stocks move lower. We've got the S&P trading below 4,200. The euro dollar is trading lower. The dollar is stronger, whenever you get stretched like this and you get people like front running, the move, the risk is that, maybe the Fed chairman is not going to be as hawkish as everybody thinks he's going to be, and then then the risk is that you get a bit of a bounce in S&Ps, and maybe you get a little bit of pullback in the dollar. So I want to ask you guys this, and this is going to be for the team here. What do you guys think? Come Friday, how do you think the Fed Chairman Powell is going to be? Is he going to be more hawkish than expected, or is he going to be more dovish than expected? And what is going to be your expectations on moves in the market? And I'll start with me. I do think he's going to be hawkish, but not as hawkish as everybody expects. And I think that you're going to see some dollar weakness and stock market bounce. That's my feeling. So what do you guys? Let's start with Stel. Let's start with you. What do you think?
Okay, put me on the spot. Actually, no. It's a very tough one. I don't know is the answer. I mean, I kind of tend to agree with you, but I really don't have a firm opinion. It could go either way. unfortunately. So I don't know. Sorry.
So, well, so you don't know. Well,
Well, put
okay.
a gun to your head.
Well, no, and I gotta ask this. You know, what are you looking at most to trade then, based on Friday? Like, I'm either gonna do this or that. Do you have any opinions there?
Well, you mean after the event? After him? After
Yes.
he?
Well, it's gonna be Friday, so maybe you're trying to front run what you think is going to happen.
Well, as long as I said before, as long as the market's pricing a 50-50 chance of either 50 or 75, so as long as Fed fund futures are currently at 62, I don't have a view. If we get closer towards 70, then I think I'm going to take the side that you mentioned. So I'm going to take a trade which is going to be bearish dollar. But if not, I'm not going to do anything before it, I'm afraid.
So okay, and you were thinking, I'm sorry, you're going to buy what?
So basically bearish dollar trades. So probably buy some commodity currencies against the dollar, maybe the NOK, or play metals again. It depends, but I want to see the market move a little bit more, get a little bit more towards that 75 side, because let's face it, they're never going to do 100, right? And I don't think there's any way he's going to be there's going to be a hawkish shift, let's say, in the way they look at data and the way they treat the whole economic environment. Now they're they're still going to go meeting by meeting. So if we get closer to pricing 75, I'm definitely going to take a trade the other way.
Got it. Okay. All right. So Ryan, what are your thoughts here?
I think it's, well, I'll say pretty clear. The Fed got a smack round the face with all this inflation stuff. They're on their path for rates. They've got to back that up, and they've got to really show a strong hand in that. They can't, flim flam around. I think there's I'd say 30% of the market, it keeps calling out dovishness from the Fed, and they want to see it. They want to see Powell say, we're going to slow down hikes. We're going to pay attention to the economy. But 70% of the market always takes it the other way and says the Fed doing what they're doing. I think we're going to see a lot of that push and shove between those two camps going into Friday. And Powell's going to be the way. He's either going to come out and say, we acknowledge we've seen some weakness, but it's not enough. We are going to slow the pace of hikes at some point, which is natural. But he's going to make the stronger case that they're going to keep hiking until they reach their objective, come what may. And if that means rates going to 5-6% before they tail off, they'll signal that they'll do that, and be prepared to do that. So I think if you get
you think he's going to come off pretty hawkish then, and the market's going to go ahead. I'm sorry.
Yeah, it's a question. I don't know if he's going to be super hawkish, really more hawkish now, but I think he's just going to say, this is the path we're on, guys. You can question us all you like about the economy, but until we get to where we want to get to, we're going to keep going. And if that's 4% by the end of next year or middle of next year, wherever, fine, that's where it's going to be. But if they have to go longer, they'll go longer. And I think
Ryan,
yeah.
Sorry, carry on, and I just have a comment. Carry on.
Yeah, so I think if he comes out with any comments that sound dovish, or the dovish crowd pick up as dovish, they're gonna sell yields. They're gonna sell the dollar, and then the rest of the market is going to come back 5 minutes later and say, well, okay, fine, but meanwhile they're still going to carry on hiking. And if that's longer, then that's going to play out. So I'm looking potentially for a dovish dip in the dollar, and then get on that and see how high it can go from there after.
And Mike says, guys, the market will spin Powell bullish on Friday. Yeah, I mean that's I agree with that. I'm 100% agree, and exactly what Ryan's saying here is, they're going to find something in Powell's speech and say, oh, that was dovish. That was dovish. Yeah. Wait,
same as the minute.
He's hiking. I know he's hiking, but that's still dovish. More. Yeah. The market's going to spin it that way. I believe that too, and I think the stock market will bounce and dollar will pull back, and yeah, as you pointed out, maybe yields will roll over.
It's similar to what happened on the minutes, but on a bigger scale. You know, the market will pick out its choice dove headlines. Zero Hedge will scream about it, and the rest will scream back it. We'll get a little reaction, and then the rest of the market will come in and go right, dollars to new highs, or yields firmly through 3% in 10, something like that.
Right. I'm with you on that. All right. So what do you think there, K-Man? How, you know, what do you think is going to happen with Powell? Do you think he's going to be super hawkish, or maybe spun a little dovish too?
Yeah, but I think Stelios wanted to make a comment.
Oh no, we ignore Stelios here.
Don't worry. I was just going to say, that there is reason why the market is trying to look at the dovish parts of anything that happens, is because Powell has already made that tiny little step towards shifting, right? Because, like we said before, they're going to be data dependent now, and now they're not on autopilot. It's going to go meeting by meeting. So that's why I think the market's trying to kind of anticipate and pick out the dovish parts and all that. I agree with you guys. I think they're going to keep going, but I think that the we have passed that point where they were like full throttle. We keep going, no questions asked. We're past that point now. So now we're getting closer to the pivot slowly. Yeah. No, we're not there yet, but we just have to be aware of that. And as Blake correctly said, I think the more we get to pricing hawkish, a really, really hawkish Fed, the more I want to go against it.
Yeah. All right. Well, let me ask you. Well, K-Man, you go ahead. You never got a chance to answer.
No, I mean, I think Powell, as usual, is going to walk the fine line. He's not going to give the 50 or the 75 to the market at all. That's my view. He already said, as Stelios just said, that they are going more data dependent, but he's not going to give anything dovish to the market either. So I think to call the pivot, whatever, is too early. But the market is clearly wants to sell dollars, and they are and the market is now painted in a corner because the dollar, people need dollars for some reason. And I think that if it doesn't give the market anything dovish come Friday. And then we are going to go into September, where QT will double up, and I think we are not done with the dollar right now. I don't think right now we are done with the dollar unless he really shifts dovish, but I can't see it happen right now.
Well, you know, and I mean, if you look at the dollar, this is a weekly chart, right? And I'm going to just kind of zoom out a little bit. If just so you can kind of think about what K-Man's saying here. You know, the dollar channel would really take us to 113. We're at 108 right now. I mean, you know, that could mean, if that plays out, you know, the euro's towards 90 cents.
Yeah, or 96, 97, 95. It's possible, especially that you're not only looking at the dollar if you look at the euro dollar, right?
Of course.
The euro is an absolute piece of crap right now, and if you look at the European side of energy, it's getting worse and worse. And we are not out of the woods by any means in the euro. That's why I still prefer to trade euro crosses, especially from the short side, despite what risk is doing. Risk has decorrelated, in my opinion. I was already saying on the flow show, and I mentioned it already a couple of times, you can't trade yen on risk right now. Yen is just stuck to the 10-year yields, the US 10-year yields, and what's happening to energy. Yeah, if you look at the dollar overall, it's always a case of picking out the right dollar to be long or short against the which currency, you know. But I don't think it's a case of being long euro dollar right now yet. There might be other currencies which will be doing better.
Right, I agree with that. And you know, real quick, I know you have Adam Button coming in today, so I'll really fast. And we have some Canadian data, some housing data. What's that?
Oh, Steve took control. Steve, promote Adam, please.
Oh, okay. Real quick, we have some housing data coming out of Canada. Let me just pull up that data flash again. Make sure I've got it there. I don't think this will be a market mover. And you look at the dollar Canadian, it's not doing anything right now. Any last minute thoughts, guys, before we go? And by the way, for all of you listening in, thank you very much for the birthday wishes. I do appreciate it. We had a big celebration at our house last night, and we had all family over. It wasn't just for me. It was we celebrate all of the August birthdays together as a family. We do that a couple of times a year, and so it was a really nice celebration. And thank you all for the very nice birthday wishes. Feels weird to be 50. Stel, how's it feel?
Get used to it. Get used to it, Blake.
There's one last currency pair I want to mention, and it's the dollar CNH. Take a look at it. It's reaching new highs. Huh?
Yeah,
this is
a risk off type of signal, isn't it?
It's really breaking. I think there's because the PBOC lowered some rates, and the Sichuan situation is not getting better. It's even getting worse. COVID cases are getting worse again, so I'm still firmly bullish on the dollar yuan right here and now.
And speaking of which, I guess I should mention this before Adam comes on. Take a look at the VIX today. We're back, above that wedge, or back in the wedge, excuse me, and that's a nice ugly sign that stocks might stay under pressure today. Just between that and the CNH, got to keep an eye on it. All right. I want to thank everybody for being here. And Dale, thank you for the wonderful song this morning. Appreciate that.
Happy birthday, buddy.
Thanks, man. All right. You guys all have a great one, and we'll catch you on the morning edge in about 45 minutes. If you're part of the ForexAnalytix community, we'll see you there.
Cheers, guys.
Thanks, everybody.
See you guys. See you, team. Thank you very much. Adam Button, welcome back to F.A.C.E. How are you, buddy?
Good to be here. Happy birthday to Blake, too.
Yeah.
Oh, thanks, Adam. Appreciate that.
So when are you going to be 50?
That'd be a little while yet there.
Huh? I would love to be 50. Let's talk about what's happening in the markets. And I want to acknowledge that at the beginning of the year, and this is a quote from you, we were going over the board as usual, and you said, Dale, I'm worried about China. You were one of the first to bring it up. I think it was before Evergrande, and really has been happening in the background for a long time, but it seems to be, coming into more of the forefront that China could tip the whole globe into a recession. I mean, they pulled us out in 2008. They helped pull us out of the Great Recession. They're going to take us down with their zero COVID policy.
Thanks, Dale. It's interesting you mentioned 2008, because I think it's the untold story really of the financial crisis is how much China stimulated. I mean, the whole world was really on its knees, and China went absolutely bonkers with the stimulus in 2008 and helped pull the whole world out of it. Whereas now it's the opposite, right? China is the sick man, obviously, along with Europe. And so that kind of put isn't there anymore. And it's worrisome. Markets, but to bring it back to just me and you, I mean, last month we were talking on here in July at some point, I guess it was, and you basically nailed the bottom of this equity bounce. It was a really fascinating interview if people pull it up, because we're kind of thinking out loud a little bit on just how negative sentiment was about 5 weeks ago. And that was really the tell, because everybody was screaming bearish, negative. And I mean, that's trading, right? Nothing's improved on the fundamental side, but everybody was bearish. And that was an incredible bounce and a rally. And I think, to catch that, sets people up pretty good for this next. And now we're here again, and it's looking to me like it could be a turn as well.
Yeah, we're talking about it. Failed right against the 200.
It's almost cliche, right? I mean, I
That's
saw
what
it
make.
running into it
Yeah,
on last
yeah,
Wednesday or so, and it hit it, and it
yeah,
was like, well, this can't die here, can it? But
yeah.
a couple days
Can you
later.
imagine if we get a pullback and close back above the 200?
Well, that's it. I mean, a lot of the kind of bears now started to second guess themselves. It was a pretty impressive rally. Certainly technically, you've got the RSI there, you're back into kind of a neutral range. VIX popping again. Europe. I mean, that was the other thing we talked about a month ago, and you were a little more bullish than I was. I was constructive, and it was the gas crisis in Europe. We didn't know what was happening with Nord Stream then. They were talking about this shutdown. And we kind of talked it out loud about saying, well, it doesn't really serve Russia to shut it off completely, but to taper flows would have been the answer. And that is exactly what ended up happening. And now here we are, they're going to shut it down for another 3 days. Who knows what's going to come out of that? But this kind of tapering it to 20%, I think Russia is making more revenue than it did a year ago at 100% because the prices are so much higher, the 20% it's selling. So, and Europe's absolutely on its knees here. I think Citi was out this morning talking about 18% inflation in the UK by January. And, Europe is going to be facing the same sort of thing, depending on energy subsidies. And I was very bearish euro when we were here.
How many countries are going to break from NATO this winter when they're under even more duress? It's not just financial. It's about that there is no gas. He turns it off.
Well, that's right. I mean, I think it takes a while. I don't know if anyone's going to break this winter, but who has the ability to withstand this longer? And right now, Russia's obviously under some significant economic pain, but Putin he's not up for election or any kind of real election.
He just has to avoid car bombs.
And he's yeah, that's right. He was out there saying, Russia, no one can take pain like Russians. I don't know if I'd argue against him.
Well, I think that, a lot of people, even in the U.S., saying, Russia's just a gas station, are eating their words. So it's not just a gas station, is it? It's an everything station, commodity wise.
And that's what me and you've been talking about for over a year, 2 years, really, is that the energy market is misunderstood. And that's probably been the best opportunity in markets in the last year. Is okay, Russia just produces oil, but if you take away 10% of the world's oil or gas, the price can go stratospheric because the inelasticity of demand in a lot of this, and that's exact. And then gas goes into production of electricity. You say, well, now Russia's just the electricity station of Europe, and then suddenly it dawns on how important that whole paradigm was. But I don't see any signs of Europe breaking here politically yet, but economically, I mean, it's dire. And it's interesting to see the euro back below parity. And it's funny, we look back a month ago, we were talking and things were bad then. The euro wasn't much higher than it is now, though. And things have gotten a lot worse.
It's going to take closes over 103.50 to change the trend. The only caveat is I did see or read about positioning in the dollar and euro, and I think this is the most short the market's been in the euro since 2018.
Yeah, well,
and that was another pretty good low, huh?
Some real money selling of the dollar in the last month to keep it here as well. I mean, the Fed, if you look at Fed pricing, I mean, we've taken out 50 or 75 basis points of hikes. So part of that chart reflects somewhat of a weakening dollar. And we saw that in dollar yen, right?
I was going to ask you what you thought about that. And, that brings us back to yields. So we got the 3%. This is the game on Friday. Are we going to blow to new highs, or is this another failing rally in yields? Adam, what do you think?
I think the most important thing that's happened singularly in FX really this year is the decoupling of the yen trade. What happened on Friday in equities in the US?
They were down.
Big time, right?
Yeah.
And what would happen with dollar yen?
Yeah, right.
It's up.
Yeah, today
And,
too.
you know, you can take any year in the last 20 years, and that was like a black swan event for those to move in the opposite
Right.
direction.
Right.
And it's the paradigm. There's an entire regime shift that's ongoing right now in FX, where the yen is no longer the safe haven of choice. It's
By
the
the
dollar.
way, Adam, do you recognize this shirt?
Hey,
Huh?
we're fine.
Anyway, Mario
Maybe he'll-
Draghi playing lead guitar in Italy now.
Maybe he'll make his way back one more time.
He'll
got
do
off that-
anything.
It's a sinking ship right now.
Yeah. Okay, so you know, that's an interesting, yeah, that is really something that really did break down. Kind of went more with interest rates than you know, and that's partly that bonds went down,
Yeah.
rates went up. So, you know, it decoupled from risk off, but coupled up with yields.
Yes.
This is kind of interesting to me today, is Aussie usually suffers with risk off, and it was down Friday, but what, you know, I would have expected it lower here today. So the commodity currencies are saying something else. You know, dollar's threatening the high. Canada got to 61.8. Aussie is making its well, maybe its second, or working on making a higher low here, even if they took it to 68. These currencies are saying to me that even though gold is down and oil's been down, that the commodity bull is not dead.
I mean, the next cycle, whatever it is looking very good. I mean, I think a lot of currencies you're pricing in now, first of all, current account and trade surpluses. And secondly, energy security. Anybody who has it is a winner. Anybody who doesn't have it, I mean, say goodbye to your heavy industry. And I mean, I think it's widely understood that the market will be short of commodities at some point this decade. And the timing is hard to say. But I mean, those investment flows haven't even started. I think you can't start a mine right now in Australia because you can't find workers. And that, I mean,
even if you have workers, it takes a long time to get a mine online, doesn't it?
Well, absolutely. I mean, and then you're it's hard to pull the trigger on building a mine, because you might say, well, this is $1 billion mine. And 2 years later, you come back and say, listen, the cost of everything went up, and now it's $1.5 billion. And that's not a very good look to investors or anyone else. And predicting costs right now on anything like that is extraordinarily difficult. So yeah, Aussie, you know, there's still a lot to like there. And I just think a lot of these correlations are breaking down. Really, the regime of the first 20 years of this century has a lot of that, you know, safe haven flows into the yen. That's not really happening anymore. The Swiss franc still getting it, but it's less compelling than it was. And you have intervention risk, tons of money flowing into dollars. But then you have places, these pockets, Canada, Australia, some emerging markets of getting these kind of flows as well. So I think we're just looking at a new world order right now in FX. Now, like you say, yields, yields part of it. We go back to the old regime. There's a reason that regime was in place. But I think in terms of Europe, it's really falling apart. You know, I wouldn't be surprised if we see physical immigration from Europe, and not just the pockets of sort of poor Europe to North America, you know, that sort of thing. So it's ugly. And that will be reflected in the euro, without a doubt.
Yeah.
It's
all right.
going
Well,
down.
we're about 30 pips away from, what was this low
Well,
here?
that's it. I mean, that's
99.52. So we're about 40 away to making new lows. One thing, won't confirm on the daily, but
I mean, the equivalent
maybe
the equivalent price on gas is like $500 a barrel right now, up for gas oil equivalent. It's insane.
Okay. So I know that long term you're bullish. if say for example we got another break back down towards 84, 83, or even here, are you tempted to buy the energy? I know the play's been in nat gas, but maybe there's going to be substitution. And
well,
I'm normally bearish crude, right? I can't be bearish down here.
It's that substitution trade is an interesting one because it's never really been done. It can't be quantified. You can look at, okay, it's $500 barrel equivalent, so you switch to oil, but it's not easy to switch. You can't flip a switch and burn oil instead in all cases. So we'll see. I mean, you have a $5. The last $5 is probably Iran being priced in. You might get another $5 lower if that happens. Looks like it's going to happen to me, but it's politics. Tough to see what happens there.
I'd buy that break. It's kind of, I mean, the top was put in at 132 when Europe said they're not going to take Russian energy. These big news events seem to be behind inflection points. So we've been going down in crude since, last year with a secondary high in June. So I think the market, that would be a sell the rumor, buy the fact to me if Iran deal got done.
Certainly some of it getting, and then, everybody's worried about China and Europe. Fair enough. How much oil demand are you really going to take out with that? How bad would this global recession be? And how much oil is out there? I mean, the SPR is going to run off in October. They're not, I would have thought actually a few months ago they'd extend that. They're going to keep, they're going to end that US SPR release. Russian sanctions, a lot of them hit in December. And right now is the time of year when oil companies start to make budgets for 2023, drilling budgets. And I would have said it at 120, 110, we'd see some pretty big step ups in spending and drilling. At 90, I think it gets pretty cautious again. So you're not going to have the supply. And that isn't necessarily just a 2023 story. It's 2024, 2025. It takes a while to bring things online. There's just not enough supply out there. And I think it couldn't get any simpler than Warren Buffett buying Occidental. Hand over fist, the trade is in the oil companies, not necessarily the commodity, because even at 90, they're making insane amounts of money.
Yeah, the shares have held up much better than the underlying commodity. So can I get you to say that you want to be a buyer in crude at some point here?
Yeah, absolutely. I mean, I thought we'd maybe hold 90 a little bit better, but 85, and even like, it's same as that copper trade. I'm just so confident in the long term. There's not enough supply in these things. Now, the risk is that you have a really brutal recession. And I'm not in that camp. Hard landing. And, you start to see headlines like UK inflation at 16%, 18% from Citi today. You think, geez, maybe they have to raise to 6% or something like that. That doesn't curb energy inflation. So I don't know if it does a lot of good. And I think central banks are going to have to struggle with plunging the economy in recession because of high natural gas prices. But that's the risk right now, is that rates don't, right now Fed market is priced terminal 3.75. If we start thinking about
we're way off that, right?
Yeah. And
I mean, we're only at 298, so 3.75 is at new highs for yield. So
but the US, there can be a virtuous cycle here. We talked about it last time, was that pain gets so bad in Europe and the UK, even in China, that it takes down demand and it frees up supply for the US, which lowers inflation, allows the US to continue to grow, keeps the Fed from hiking too much. So Europe takes all the pain, the US gets all the gain.
Interesting. All right, so tell me about what you think Powell's going to say Friday.
Yeah, I mean, I don't think that there's really that much going to be in it. It'll be that same, we're going to do what it takes. I don't think he's going to give a strong hint on, they want to preserve this optionality. I think that was one of the big messages over the last FOMC. We're done with telling you what we're going to do until maybe before we do it, we'll leak it to the Wall Street Journal.
Till we get positioned.
And and they, they want to see non-farm payrolls. They want to see CPI. PCE. They want to see it all for another month. We're still, I think it's 1 month yesterday to the FOMC. So it'll be that we're committed to bringing down inflation. We don't know what we're going to do. And so what does the market do with that? You know, we're kind of in this negative mode right now. Maybe the market, you know, the last turn for me was on Waller. Waller came out and said the market was sort of debating 50 or 75 or 100 ahead of the last FOMC. And he was the last guy to talk. And he said, unless retail sales are really strong, CPI is super high, we're going to do 50 or 75. And that was the big turn really in risk sentiment. Now we're way back up here. Europe's falling apart. It ran into the 200-day. Yields, like you're showing there, a tick back up. I think it's a lot easier to be negative right here than it was a month ago.
Yeah. Okay. So, you know, anything you see, I know that you're probably looking ahead into September for some seasonals. Anything seasonally you'd be looking for?
Well, September's the only month, I think, in the last decade that the NASDAQ has averaged lower.
Okay.
And if you look at, I think you go back a couple of years, if you remember 2020, you know, we're coming out of the pandemic or coming out of the peak pandemic. And there was a real strong rally at the end of August, and it kind of almost blew off the top and then plunged in September. The liquidity comes back. I know positioning isn't great right now if you're bearish. So the positioning is pretty bearish already. And that was really the tell a month ago. But I think now we talked about the turn a month ago, and I think it's funny we're talking again, Dale, because I'm bearish here.
Okay.
And we'll see what kind of shakeout we get in September.
I'm thinking around here.
That's a good start.
39, 4,000, 39 and a half. And I'm thinking if we break 3,800, the odds of new lows increase very dramatically. 3,800 is kind of the bull bear line for me.
What has to happen to get there? I mean, we see some more negative economic data, high inflation still, start to price in the Fed hiking more. China is easing today, right? So that, I mean, that's probably behind that rally in the Aussie today. I mean, that's twice in 2 weeks that they've cut. So you got to assume more of that's coming. But they're struggling with the property market, and that's
it's a basket case.
It's tough to stop that kind. I mean, that's a psychological trade.
Yeah. Well, you know, all of their country people that had money and had savings, 90% of their savings went into that. Do you believe these bank runs are real in China?
No. I mean, I think China has incredible levers to pull in terms of.
So you think they're phony, you know, fake
if
news?
You remember the ones outside, there was like there was a bit of a scheme that was tangentially connected to banks, and they ripped people off, and so people went to the banks. You see this kind of in any country where.
It sounds like you know, Celsius or some.
That's
Bitcoin
it, right?
broker.
You blame, you know, they said, I can't think of a great example, but. That was kind of the thing there. People blame the bank for somebody had kind of partnered with that ran a bit of a scam and took everyone's money. And then, you know, you got to remember the world we're in, and we see it every day, is things get elevated and escalated and amplified, the dramatic negatives, right? And I think that as a trader, your mindset more and more needs to lean against a lot of this and be skeptical of it. And you know, because that's what gets amplified right now is any kind of drama, and be careful with that. I mean, the world is still a pretty good place. China is still growing and will continue to grow. But this, you know, this could be the shakeout. The real crisis in the world right now is gas in Europe.
Commodities.
That's where I want to be bearish.
Okay. You worried at all about Russia escalating with what's happened recently? I'm almost kind of surprised. I mean, we have supplied weapons that help them target ammo and jets in Crimea.
I mean, if you think Russia's strategy, I mean, if I've looked at Russia, I'm thinking, we maybe haven't done as well in Ukraine as we had hoped.
Right.
but we're doing a lot better in Europe. If your idea is to wreck Europe politically, you know, this is looking pretty good. So you say, am I even, you know, I could kind of take down all of Europe here and get kind of total political regime change. I don't know if they were these, you know, it's unrealistic to think they'll be pro-Russia, but, you know, that is an interesting way to look at it, I think, and say, you know, Russia can kind of just stretch this out from here.
Yeah, to break U.S. hegemony over Europe. I think that's it. And, you know, freezing in the winter is a pretty good leverage tool, isn't it? It's one thing to go broke paying bills. It's another thing not to have it.
So Russia, you know, is there that much in it? They could kind of just wait it out now if they think they can.
Yeah.
Because I think Europe's, I don't know how much pain they can tolerate. We'll see. But this winter, I mean, they're all in for this winter. And these gas prices are scary. And you know, what scares me is it doesn't seem to have hit fully. I mean, you see some businesses, I think there's a lot of lags in the pricing of it and billing and whatnot that I don't think people have realized that they're going to be hit with. I mean, it was crazy to see that the Scholz, German chancellor, there were the protesters there, the topless protesters. I'm sure you've seen, Dale.
I didn't see that.
Oh no, well, you'll have to look that up. They went to take a selfie with Scholz today, and then they went topless, pulled off their shirts, and it said "No gas" or "Cut off Russian gas" or something along those lines. I was struggling to read the words, but they got their message across. But it indicated to me that
20 years ago, before you got married, you wouldn't have even flinched.
it indicated to me that they're, you know, like at some point it would be the protesters, topless protesters saying, take the Russian gas back, right? Like, has that pendulum really swung yet? It's insane to me. It's either people don't know how much they're about to get hammered with that, or they're just wildly indoctrinated. I don't know what the sentiment is on the ground, but I know what it will be. I know what it will be.
Best idea going into September.
You know,
and if you don't have any,
short Nasdaq, short the euro. Really watch this yen trade. It's interesting. It's up today. Futures way down. I think dollar can go really super strong, and we get
melt up in the dollar.
A real something going in the dollar.
Okay. All right. Don't fight the trend, Adam Button. And I really appreciate you stepping up today, bro. Great. Another good conversation. I always learn from you.
Wonderful way to start my week, Dale. Thanks
okay. And you could follow Adam individually at FX_Button and follow him on Forex Live, and one of the best news traders I know. And appreciate you being with us. Have a great end of the month and fall trading season, buddy.
Thanks for everyone. Appreciate those comments down at the bottom of the screen too.
All right. Take care. Adam Button, everybody. Thank you. Thank you, bro. And in about 18 minutes, you can join the team on the Morning Edge. And everyone, let's be hopeful in our trading, but have your stops in. Let's go into this week being hopeful. And don't just count your pips, count your blessings. So far, I've seen a couple of tests. I don't know if it means anything. It is, you know, the 78.6 level. Silver's trying to hold. We'll see. And that's a wrap. Adios, everyone.